Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. Dollar weakness is the talk of the town. Dollar is trading lower against all majors. Euro trading above the 1.11 mark, sterling trading above the 1.30 mark, and of course the bout of strength in rupee yesterday. Good morning, JK. Day of significant moves. What's your take?
Hey, good morning, Swaraj. Yes, I think mostly what we saw yesterday was a move in the dollar. Other markets were somewhat on a consolidation mode. Dollar has weakened, to touch the January second low of this year at 101.30, just one pip above the low of 101.29. Now, what I observe is that it has fallen for the last 8 weeks continuously, and normally after such a period of fall we see a consolidation or a correction, and also being the low of last 8 months, I think it can hold up for some time, particularly when we have key events ahead like FOMC minutes tonight and the Jackson Hole summit starting on Thursday, where the Powell speech is eagerly looked forward to. And also, we have seen the euro touch almost a year low now at 1.1139, and also the sterling trading about 130. So these are levels that take some bigger trigger to break. Otherwise, market likely to consolidate. That's about the dollar. I mean, speaking of the dollar, of course, even the dollar rupee has seen some down move in the last few days. Touched a low of 83.75 yesterday. Although it's not, really significant move compared to the moves in the other currency pairs, but the direction has been on the same side. Why the dollar rupee is not moving as much as the other currencies is because of a couple of reasons. That the dollar rupee RER is overvalued by over 7% as per the latest RBI monthly bulletin of July, and hence the RBI would be loath to let the rupee appreciate too much. So if the other currencies are appreciating, they would let the dollar rupee being stable in a level, allowing it to correct its overvaluation. That's one part. Also, we have seen from the same bulletin that RBI has sold over $15 billion in the month of June on forward. So while their headline reserves are at near record levels, there is a short position in the forward. So I believe that even if there is a selling from any inward flows, they would be absorbing at lower levels to rebuild their reserves. So all these reasons point to, and of course the dollar index also being at a major support. I feel the dollar rupee has limited downside right now below 83.70, where I think importers should act to cover their near-term payables. Dollar rupee, I think 70. 90 would be the range for this week ahead of the key events, of course. And speaking of events ahead of this week, we have, of course, one of the important events tonight, where the Bureau of Labor Statistics will be revising their payroll numbers of the last 1 year, that is from April 23 to March 24. And this is an annual revision that takes place by the BLS. And so some people are expecting a large revision, while others are not seeing a significant change. But if we do see a very large revision, that can strengthen the market's case for 1% rate cut. Otherwise, market is now more slowly veering to 0.25% cut in September, followed by two more cuts, as against 0.5 and total of 1% cut. So what we will look forward to from the Fed minutes is how the members see going forward. and also about the quantitative tightening as well, when it is likely to end in this cycle. So these are the 2 points we'll see from FOMC. Of course, from Powell, we would like to hear a confirmation that they would be cutting rate in September, and also to the extent of cut that we can expect this year. These are the two things. If he remains cautious, of course, after September move and data dependency will that will be a good enough trigger for dollar to correct its recent steep fall. Otherwise, overnight markets were quite steady, not much movement seen in the stocks, a little bit of negative, and also the yields are moving on a very narrow range. But it's also getting good support because we are having good amount of issuances coming for 20-year bonds in the US. So at these levels of yields, it's very unlikely that large investors would be staking big amount to buy those bonds. So yields being supported means even the dollar will remain supported. So while we have had very few numbers or economic data to move the markets, we did see a good amount of technical move in the dollar and the euro, but likely to stall ahead of the key events this week, starting today. Thank you.
Thank you, JK. And of course, FOMC minute tonight would be the talk of the town, and people would be paying attention to that. But apart from that, we have an interesting BLS revision that is coming up tonight, where they will be revising the payroll numbers for last 1 year. This would be important as markets are constantly now assessing the health of the job market. And of course, on Thursday, markets would be keenly awaiting Mr. Powell's speech at the Jackson Hole Summit. And of course, amongst all of this, markets are constantly assessing whether the situation is a recession or a soft landing. And interestingly, we have a webinar which is moderated by none other our JK on 22nd, which is preparing for recession or embracing a soft landing. So it's a very pertinent and very relevant topic which is being discussed tomorrow. So do tune in tomorrow between 5 to 6 p.m. And the registration link will also be circulated to all of you. That's it from us today. Thank you for listening. Tune in tomorrow for the latest in the financial markets.